Yo, what's up? New guy trader here. First video. I've got some tips and tricks that you definitely want to know if you're interested in trading. So grab a drink, pull up a seat, and just chill here for a second and prepare to get edumacated. Okay, so I've been trading for about a year now. Still relatively new. Um, I'm not really one to do much research. I kind of just jumped into it. I screwed up a lot, so I'd like to share some of the stuff I messed up so that you don't mess it up, and hopefully you could get a little farther. So first thing first, basics is you're not going to get rich quick. You definitely heard that before. It's true. It's just not going to happen. So don't fall for any gimmicks. When I first started, I put a bunch of money into the medical marijuana industry. I made about $100, and then I lost like $400. It just doesn't work. If you're on the cutting edge, yeah, you're gonna make millions. But if people have already made millions, it's probably too late. Not to say it can't happen, but it's very unlikely. Like the other thing is you're gonna see ads for and emails, get stuff like that for this guy has the number one stock in the next 20 years. This guy has a book that outlines the secret. He's got some algorithm. It's not real. If this guy had the algorithm that could make him millions, he'd be using that to make millions. He wouldn't be selling $10 books and $10 emails and crap like that. It's just not real. Um, I have two main strategies. I like dividend stocks. I mean, they sit there, you do nothing, just pay you. Very easy. They're usually relatively stable. I like them, but my main strategy is I'll buy a drop. So what I like to do is it works good with pharmaceutical stocks, tech stocks, stuff like that, stuff that's really volatile. So I'll go to this site here. It's called stockscreener.org. I'll post a link to that, and I'll go and I'll just look for a stock that has dropped. Normally there's a lot. You'll see the 20, 30% drop, stuff like that. So right here, the only one really today is Tilray. They're a medical marijuana stock. So then I'll choose one here. I'll go on to CNN Money, look at the forecasts, and I'll just type that in and I'll look at it. I like to look at the low or even below the low estimate because it rarely even reaches the low estimate. So this is forecast to make it to $36. I'd guess about 34, 35. Still, you have potential to make about $3 on a stock. It's not bad, but the what I don't like about this personally, I wouldn't buy this. I don't like buying stocks more than $10, and that is because with my strategy, what I like to do is I never buy everything at once. And with a $30 stock, you kind of, especially me, I only put $300 into this. So with the $30 stock, there's not much I could do. If I'm buying a $3 stock, I could buy 5 shares, and if it drops, I'll buy 5 more, and if it drops again, I'll buy 5 more. That way, my average cost is somewhere in the middle. If I bought 15 stocks up front, my average cost is the same that I paid for it. So I might not even break even if the stock continues to drop. If I buy it each way as it goes down, I can still break even and even make a profit, even if the stock doesn't reach the original price. So I like to do the same thing when I'm selling. I'll get to a point where I'm happy to sell. I'm making some money. I'll sell about 75% of my stocks, but I'll keep about 25% just for the heck of it, and I'll wait for it to go up a little more, see if I can make a little bit extra. Does it work? Sometimes, not always, but it's worth it. I've made a couple extra bucks here and there doing it. Um, Diversification is really good for dividend stocks, not too good for buying on the drop. And that's because buying on the drop requires lots of attention. And if you have 7, 8, 9 different groups of different stocks, you're not going to be able to watch all of them. You want to keep up to date on the news. That's what's going on with the stock. You want to keep up to date with how it's changing, or earnings, stuff like that. And you want to be able to keep a close eye on them. Keeping a close eye on your stocks is very important. You look at my account right now, looks like I'm doing decent. I'm actually doing pretty terrible. And that's because I was away for 3 weeks with no access to a computer or an internet. I left on the 24th or the 23rd, so right here. And then I came back on the 14th. And in that time, I lost about $80 just because I was not able to check my account. So, I mean, I'm still ahead. I started with $300. I'm still up, not in the red yet, but kind of sucks. But I mean, I guess it be the way that it is. Um, and it, so check your stocks about once a day, if you can. Very important. But the most important time is the first hour of the trading day. That's when everything is volatile. So if you don't have the time, and you can only find a little bit, check as close to the market opening as you can, because that's when you're going to see most of the action. One other piece of advice: stop loss it's a very useful tool, but you should never set a stop loss before the market opens or leave it overnight. That screwed me over multiple times because the market likes to do weird. It likes to do weird stuff in pre-market and right when the market opens. You'll oftentimes see the stock plummet in pre-market. It'll open really low. Your stop loss will start tweaking, sell off everything, and then it'll spike back up to the regular price, and you're kind of just out. That's happened to me before. In fact, when I was away, I had Primo. I bought it at about $12, something like that. I was riding it up, and it got up to 14.77 when I was away. I had a stop loss on it. The one thing I don't like about Robinhood, and I don't know if you can do this on other accounts, is you cannot have a stop loss and a limit sell at the same time. If you could, it'd be awesome, because that you'd be set. But I was afraid to put a limit sell. I really should have. I was afraid to do that in case it dropped, which it did. But between the what was it? Between the 4th and the 6th, it dropped $4, and that was right at market opening. So I sold off everything I had, or my computer did. I wasn't there, and it rose back up. So I was out. I lost a decent amount of money on that, but I guess I'll just have to make it back up. So never leave a stop loss overnight. I haven't really used any stop limits. That'd probably be a little safer, but I still wouldn't risk it. I'm done with stop losses while I'm not there. Back to my account. I'll give you a more detailed overview of my portfolio in the next video, but here's just a quick glance. I've got a lot of oil stocks, stuff like Martin Midstream, Blue Knight Energy. That's another midstream. They're oil processing, pipeline, stuff like that. I was kind of hoping the stuff with Iran would drive the price of oil up. I mean, oil's cheaper now for some reason. It's good for my truck. It's bad for my stocks. Not much on that, but especially Blue Knight Energy was considering selling them. I don't like to sell dividend stocks, but sometimes I will. If you're buying a stock on the drop, best case scenario, it will be a dividend stock, because that way, even if you lose money on the stock, you could still recoup it on the dividend. In fact, there's a lot of times companies will slash their dividends. Companies with like 20% dividends will slash them to like 7-10%, something like that. So it's still a high dividend, but investors will get pissed off, drop them. The price will plummet, and they'll slowly go back up. So you'll still have like a 10% dividend, and you'll have got it on a huge discount. So I like doing that. That's basically it. That's all I got now.